This is going to be part of our trade selection and strategy CD. We've already added an EEM, an IWM, and a SPY position. Now we're going to take a look at the diamonds. The diamonds is the ETF for the Dow Jones Industrial Average. And if you take a look at the indices over here, you can see that the Dow Jones Industrial Average is at 127.76, 12,776. The diamonds try to mimic the price of the Dow Jones Industrial Average. It's about as close as it can get. There are some adjustments that are made, I guess, to the index itself, to the ETF. So, but it's pretty close to it. So if the Dow Jones is trading at 12,775, the diamonds are pretty close to it. It's at 127.76. You take the ETF, you multiply it by 100, and you get to 12,767, which is only about 10 points off of the actual index. So it tracks the Dow Jones Industrial Average pretty closely. Now we've been in a downtrend here, and this is how I add all of my positions. We've been in a downtrend. You can see that the channel that I've created here goes back to about October of last year. And what I like to do is, of course, now the positions that we had previous to this, were based on the support and the resistance lines in this channel, so that I could kind of determine where prices would probably fall into as we were going down into this down channel. We may have turned the corner here, and we may now be following this blue up channel trend line, which I drew back a few weeks ago. Because it looks like there were some points here that had actually hit, and there were some support points here that it actually came down to. So, this was a prior resistance point here, this 25%, 75% channel line, and it became support in here. So now that resistance has become support, I'm also thinking that perhaps the blue line now, the blue channel lines now is the new uptrend channel. So if that is the case, and it looks like we were starting a new uptrend here, I'd want to set my iron condor. I'm going to do an iron condor on the diamonds so that it's around 133 on the upside, because that's above the blue channel line. And these channel lines are only guidelines. I mean, the price can do anything it wants, really. It can go up, it can go way above this, it can go way below this. It doesn't really matter. But it's just because it's a very liquid market and there's many players in the market, things do tend to go in channels. So that's how we're going to play them. On 133 on the upside, 121 on the downside, 122 on the downside. Seems like it would be a good support level, 133 resistance. So that's how I've set this trade up. I've actually gone in and right-clicked, brought up my iron condor. I'm selling an iron condor. Let me just go back and delete this, and I'll show you exactly what I did here. I want to get up around the let's see, what did I say? 131 to 132 if I can get a decent price for it. That's fine. So we're going to right-click on this. We're going to sell an iron condor. Now it brings up my call strike prices immediately. I've got the 131, 132, but I like to go 2 points apart, so I'll go 131, 133. And then on the put side, I think I said our support was right around 122 in that area, but we can go as high as 123, even 124, whatever we can get the best price on. The 123 doesn't look too bad, so let's go 123, 121 on the downside. That gives us about an 86 cents credit, which is pretty good. Maybe a little bit rich. Maybe we can go a little bit higher on the upside, because I think there's more upside potential on this index than downside risk. So if we go 132, 134, and maybe we can even bring this up, because I like to be right around 70 cents here. Maybe bring this up to 124 and 122. So now we got about a 79 cent credit that we could get. I think that's probably about right. We're going to do 3 contracts on this. we're going to, now the very next step, after we get this into our order entry window here, we're going to take a look and analyze it as a duplicate trade by itself, and take a look and see exactly where we are in our picture. If we like this picture, then we're going to go ahead and do the trade. But our break even is down here around 123.25 on the downside. On the upside, we're right around 132.82, which equates to 13,282 on the Dow. Let's just take a look at this again. And it looks like, you know, that wouldn't be too bad, 132.83. So we're up in here, which will probably hit before this expiration date. But you know what? As prices go up, we can also adjust our position as well. We just want to make sure we're getting a fairly decent credit on the downside, which we are. We're selling the 124 at $1.19. We're buying the 122 at 79, which should be fine. And remember, the nice thing about iron condors is the price can't be in two places at one time. So if the price does run up on us, guess what? The put side of our position is going to dramatically increase in profit, and then we can simply roll the position up